Welcome to the deep dive. Today, we're diving into something pretty interesting. You sent us Karnataka Bank's investor presentation, and wow, 100 years in business.
Century, that's something.
That's got to be some kind of record, right? They're really pushing this banking with legacy, embracing the future thing.
Yeah, it's interesting timing, right?
Mm.
Usually when companies hit a milestone like this, a big anniversary, it signals some changes on the horizon. The question is, how big are these transformative steps really going to be?
Yeah, are we talking like a fresh coat of paint or a complete overhaul? And the numbers, well, they're telling a story, but it's a little confusing.
How so?
Well, on the one hand, business is booming. They're reporting like 12% year-on-year growth. Deposits are up, advances are up. Everything seems great, at least at first glance.
Ah, yes. Appearances can be deceiving. This is where we have to put on our detective hats and dig a little deeper. Because get this, profits are technically up year on year, but they've actually dipped a bit since the last quarter.
Now, why would a bank with such good growth numbers see their profits dip? Doesn't really make sense, does it?
It's a head-scratcher for sure. And if you look closely at their financials, you start to see something interesting. They're moving away from what they call bulk PSU advances, essentially those massive low-yield loans. It's a bold move, especially when you see that they're simultaneously trying to grow their retail banking segment.
Hold on, explain that like I'm five. Why is switching to retail banking risky?
Okay, so imagine this. A big loan to a corporation. It's like a giant ship, slow-moving, but generally pretty stable. Retail banking, on the other hand, is more like a fleet of speedboats, all those smaller loans to individuals and small businesses. You have the potential for faster growth, but there's also a greater chance of someone hitting a waves and, well, capsizing.
Okay, so they're swapping out those big safe ships for a whole bunch of speedboats.
Riskier, yeah, but potentially way more rewarding if they can navigate it. But can they? That leads us to probably the most important factor for any bank, asset quality. You're absolutely right. And this is where things get really interesting. Their gross NPA, which is basically the total value of bad loans, has actually gone down. Good sign, right?
Sign. Seems like it.
But their net NPA, which is the value of those bad loans after you factor in provisions, has actually gone up a little.
Oh, is that bad?
Well, remember, they're taking on more risk with this whole retail banking thing. The real key here is how they're managing that risk. One positive sign is their provision coverage ratio. It's essentially like putting aside extra money just in case those speedboats start springing leaks. A strategic move for sure, especially since they're focusing on lending to MSMEs, agriculture, and housing sectors known to be a little more vulnerable.
So they're playing with fire, but they've got a fire extinguisher handy. Got it. Well, we can't talk about banking today without talking about the digital world. How's Karnataka Bank adapting to all of that?
It's a million-dollar question for any legacy institution these days, isn't it? And Karnataka Bank, they're going all in on this digital-first image, boasting about their mobile app installations, 3.5 million. The growth in their debit card usage, impressive numbers. They're even opening a fancy new technology digital and product hub in Bengaluru.
They're putting their money where their mouth is. But this bank within a bank concept they're pushing now, that's interesting. What is that exactly? It sounds kind of like banking inception or something.
It's a clever strategy, actually. Imagine you're trying to renovate a 100-year-old building, but you still need to live there. It's way easier to build a brand new structure inside, right?
Yeah.
And that's kind of what they're doing, streamlining all their digital operations, creating a more agile and responsive framework. It's about building a bank for the future within their existing structure.
Talk about a balancing act. But is it working? I mean, are these just buzzwords or is there substance behind their strategy?
Well, their stated goal is pretty clear. Delivering excellence in core businesses with underlying technology platform. Bit of a mouthful, but it gets the point across. They have a three-pronged approach to get there, and it all ties back to what we've been talking about.
Okay, hit me with those three prongs. What's the master plan?
First, they're doubling down on what they know best. Rural, MSME, and retail sectors, their RAM focus, as they call it. Second, they're going all in on digitalization and partnerships, things like their collaboration with Ugro Capital to streamline their operations and reach more customers. And third, they're fostering a more performance-driven, customer-centric culture within the bank.
So it's all connected. They're making calculated moves to prepare for the future of banking.
Exactly. But the question still remains, are these calculated risks paying off?
So we left off talking about Karnataka Bank's strategy, this whole RAM focus and the digital push and changing the culture. It's a lot to take on, especially with the whole legacy thing. Are they just hoping something sticks?
Well, remember, this is a bank that's been around for 100 years.
That's true.
They didn't get here by being reckless. What's interesting to me is how they're using that legacy to their advantage.
Okay, so how does a bank that's 100 years old in a changing world, how do they stay relevant? It can't just be about looking back, right?
Nostalgia only gets you so far right.
Hmm.
They're tapping into something much deeper.
Hmm.
Trust. Especially in rural areas and with those MSME markets, relationships are still so important. And people they know, Karnataka Bank, they've relied on them for a long time, generations. That kind of loyalty is really valuable these days.
So they've got the trust, they're embracing technology, but how does all that translate into actual numbers? Their net interest margin, for example, their M, that's really important for a bank's profitability, right?
Absolutely. And theirs has actually dipped a little compared to last year.
Really?
Yeah, it might seem strange because they're growing, but it probably has to do with their shift away from those bulk loans.
So sacrificing short-term profits for something bigger down the line.
That's the bet anyway. But it's definitely a balancing act. Their cost-to-income ratio, CIR, that's another one to keep an eye on. They're spending a lot of money on technology talent, new branches, and those things, they cost money.
Yeah, it's like they're trying to renovate a house while they're still living in it, right? Got to keep the lights on even when you're covered in dust.
Exactly. And they're managing to keep things running for the most part. But investors are going to want to see that CIR stabilize and even go down over time. Finding that balance between investing in the future and staying profitable right now, that's the challenge.
Can't build for tomorrow if you're drowning today, right? So how does Karnataka Bank stack up to the competition? They're not the only ones out there.
Definitely not. The Indian banking sector is a busy place. You've got those big names, the startups, everything in between. But that's where Karnataka Bank's focus becomes really interesting, I think. They're not trying to be everything to everyone. They're sticking to what they're good at: rural MSME agriculture.
Yeah. It's kind of like they're saying, we know this world better than anyone. We've been here for 100 years. Bring it on.
Exactly. That deep understanding of their customers is huge. They can really tailor their products to specific needs and build those long-term relationships that matter.
It's more than just clicking a button on an app. It's about knowing your customers. But we can't forget about the digital stuff. How are they bringing that together with their history? They've got that bank within a bank thing happening. They're partnering with fintechs. It's a lot to follow.
And that's the point. They're creating a seamless experience for their customers. It's like they're weaving together the best of the old and the new, the trust and familiarity with the speed and convenience of digital banking.
A digital tapestry woven with threads of tradition.
Yeah.
Okay, I'm getting carried away, but it's a cool story. Is it enough, though? I mean, things are changing so fast in Indian banking. What are some of the trends you're seeing, and how is Karnataka Bank handling them?
That's a great question. And I think Karnataka Bank's story really shows us a few things that are happening across the board in banking. First, you've got this huge push for digital everything. And I don't just mean having an app. It's about changing how banking works at every level.
And Karnataka Bank, they're doing that. Their investment in their Bengaluru tech hub, their partnerships, their use of platforms like ONDC, it's all part of that trend.
Absolutely. And then you've got this focus on getting everyone into the financial system, especially in those rural and underserved markets. And this is where Karnataka Bank has an advantage with its history in those communities.
They're in a good spot to support that push for financial inclusion to bring banking to everyone. It's more than just profits. They're actually trying to make a difference.
And then there's data. Can't forget about that. Data analytics, AI, all of that is becoming crucial for banks. And Karnataka Bank gets it. Their investment in their analytical center of excellence shows they're serious about it.
Data really is the future of banking, and Karnataka Bank's investing in the right things.
They are. So are they doing enough? Well, they're not sitting still, that's for sure. They're making moves, taking risks, and adapting to the changing world.
But with great risk comes great, well, you know what they say. So, as we wrap up this deep dive, what are the things that will really make or break Karnataka Bank? What should we be watching for in the coming months? What's going to make or break their success? Give us the inside scoop. What are the make or break factors we should be watching?
Well, that net interest margin, that NIM we talked about, that's a big one. It's gone down a little. And finding that balance between profitability and their push into retail loans, that's going to be crucial.
So NI is on the watch list. What else? What's going to make or break their success?
Their cost-to-income ratio, that CIR, that's another one. All this investment they're doing, technology, new branches, it's all good, but it costs money. If they can't get those costs under control, it could be a problem.
Efficiency is key, especially in a competitive market. Okay, so NIM, CIR dot, anything else we should be keeping an eye on? What's the final piece of the puzzle?
Their digital transformation, that's the big one. Are they getting new customers? Are people actually using their mobile app? Are those fintech partnerships working out? Digital is how they're going to reach a wider audience,
Hmm.
especially those younger customers who are already living in the digital world.
It's more than just having an app. It's about really becoming a digital-first bank. They have to get that right.
Absolutely. And of course, there's always the regulatory landscape, lots of changes happening in Indian banking, and Karnataka Bank needs to be ready to adapt.
It's a complicated world out there. So to wrap things up for our listener, we've looked at Karnataka Bank. We've seen this mix of legacy and ambition, but what's the takeaway here? What's the big picture?
I think Karnataka Bank is at a real turning point. They've got a good foundation, a big vision, and they're making moves. But the next few months are going to be important. Will they become a leader in this new world of digital banking?
Mm.
Or will they stumble? It's a story that's still being written.
And that's what makes it so interesting, right? It reminds us that in finance, nothing stays the same. You have to adapt, be innovative, and sometimes take a risk or two,
And maybe most importantly, keep learning, keep asking questions.
which is what we're all about. Hopefully, this deep dive has given you something to think about as you follow Karnataka Bank's journey. Until next time, happy learning.